Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 26th of December 2020, and we're publishing our gold and silver weekly update for the week ending the 24th of December. We also very briefly today look at political events and economic reports which could shape what happens to the US dollar and therefore precious metal prices this coming week, the last week of 2020. Now, before we report on what happened this past week, a brief shout out to 3 videos we produced in the last few days. $5,000 gold and $100 silver pumpers reviewed. Should you swap gold for silver in 2021? And our video yesterday, Merry Christmas from Illuminati Silver, and a special announcement. And we've placed links to these 3 in the description box below. Gold fell $4 last week, from $1,881 to $1,877, having hit a high of $1,907 and a low of $1,859. So a difference of some $48 between high and low. In sterling terms, gold finished the week at £1,370. That's down £24. And in euros, it closed at €1,542. That's down €13. Silver rose 2 cents, from $25.82 to $25.84, having hit a high of $27.41 and a low of $25.09. Quite a significant difference proportionately, of some $2.32 between high and low. In sterling terms, silver closed at £19.11, down a penny, and in euros it closed at 21.21 euros. That's up 0.14 euros. The gold to silver ratio fell from 72.8 to 1 to 72.6 to 1. It'll be interesting to see for how long the gold to silver ratio remains in the 70s and which direction it will move thereafter. Bitcoin maintained its continual rise and last week closed up $725 at $23,750. The Dow Jones closed on Thursday at 30,199 points, up 70 points on the day and up 20 points on the week. The S&P 500 closed at 3,703, up 13 points on the day but down 6 points on the week. And the Nasdaq Composite closed at 12,804, up 33 points on the day, and up 49 points on the week. So overall, both precious metals and equity markets were broadly unchanged. However, with the rise of the dollar, Brent crude closed at $51.29, actually down 97 cents. And down for the first week in well over a month. And WTI crude closed at $48.23, that's down 87 cents on the week. The dollar index rose quite substantially, and now currently stands at 90.22. Now our conclusion last week for the price trading range for gold and silver stated, quote, "So this coming week we're altering our ranges for trading. Gold we see trading normally between 1800 and 1900, with 1750 and 2000 being outliers, though we do not expect gold to touch 2000 next week. And silver to trade between $25 and $27, with $24 to $28 being outliers." Well, both did operate within parameters, but silver did edge higher, albeit momentarily, than our 25 to 27 normal range, though it remained comfortably within our outlier range. Now, to be frank, apart from a strong opening on Monday in gold, leading to its peak for the week, the remainder of last week was rather disappointing, with gold and silver closing very close to their previous Friday closes. That said, we did stipulate that volumes would be low because of early closing, and a number of traders had already taken their holidays at the start of the week. So with one or two significant moves in both directions, apart from that, all of the excitement was Monday morning, after the stimulus package had been agreed and voted on, agreed on the weekend and then voted on Monday. Ironic, though, in that the president then refused to sign it at the end of the week. Now, of course, the holiday season will also last through next week. So although markets will be open, trade is still likely to be relatively light. The two key gold prices to watch, though, from a technical point of view, are $1,912 and $1,820. A rise above 1,912 and a hold will indicate a continuance of the uptrend, and a fall below 1,820 and a hold may suggest a shift in the trend to a more bearish tone, and should prices then fall below 1,767, this will confirm the downtrend. Silver was a star on Monday, by 6 a.m. GMT, shooting to $27.41. But it did not hold above $27 for long, about an hour and a half, and then continued to decline, touching its bottom on Tuesday and then again on Wednesday, and then rising slowly back to a similar level it closed the previous week. Now, many analysts are actually short-term pessimistic about silver and feel that it could quite easily pull back to $24 from here, and even not ruling out $22. There is resistance, undoubtedly, at $25.85, but we saw that broken through quite easily at the beginning of this week, albeit not for long. The next resistance level is $26.30, which is one that we will personally sort of give more credence to. And it needs to remain above that level for a few days to suggest that the next trend move will be upwards. As we've stated previously, these weeks over the Christmas period are not really good indicators because they often occur during light trade, and therefore any news, whether it be positive or negative, has a disproportionate effect on both gold and silver prices. Now, looking at the economic data reporting last week, we stated that Tuesday and Wednesday were going to be the most important days. Not rocket science, bearing in mind, of course, Thursday was Christmas Eve and Friday was closed. Of note, the Consumer Confidence Index for December fell from 92.9 in November to 88.6. On Wednesday, the weekly jobless claims reports were broadly improving on the previous week, though to be frank, these figures mask a number of anomalies, but they were broadly positive. But then virtually all of the economic data published later on Thursday proved negative, or portrayed a deteriorating position, including goods orders, personal incomes, consumer spending, new home sales, and the Consumer Sentiment Index. Core inflation was also down from the previous month from 0.2% to 0%. And this is why we saw gold and silver prices improve a little late on Thursday. As in any other period, this swathe of deteriorating figures and benign inflation would likely have quite an effect on the US dollar, as it would suggest the policymakers would have to adopt even greater stimulus in order to affect the inflation levels and to come out of a deteriorating economic position. So let's take a brief look at what announcements are being made this coming week. Monday, nothing scheduled. Tuesday, nothing really of note. There are one or two minor reports. Wednesday, we have the advance report on trading goods for November and pending home sales for November. Thursday, the weekly jobless claims. And Friday, nothing scheduled because it is the new year. So really a pretty nondescript week, perhaps one of the weakest weeks that we've had this year for data. So what can we therefore expect for gold and silver prices? Well, there is little economic news to affect markets, and therefore we really have to move to political and geopolitical influences. The largest one is going to be whether President Trump signs the bill giving US citizens their stimulus packages, or whether he doesn't. And also whether he lets the government, US government, close down on Monday. This will certainly have an effect. In addition, Many claim that there are literally numerous pardons still in the pipeline, and also some concern about Trump enacting some military skirmishes with overseas enemies. Whilst we doubt the latter, just the fear alone could impact markets. So this coming week, we're really sticking, rather boringly admittedly, to last week's ranges for trading. Gold, we see trading normally between 1800 and 1900, though if some of the negative geopolitical events occur, it'll be towards the upper end of that scale rather than the lower end, with 1750 to 2000 being outliers. Though again, we do not expect gold to touch 2000 next week. And silver to trade between $25 and $27, again with 24 to 28 being outliers. Now tomorrow we shall be publishing episode 4, Bitcoin versus gold and silver. And our series has certainly started a slew of copycats amongst the YouTube community, because even though our videos are only watched by 1,000 to 1,500 viewers, they still invoke a reaction. We are also making positive changes to our Inner Sanctum membership, which we briefly touched on in our video yesterday, and will reveal more in the days ahead. We sincerely hope you had a great Christmas day yesterday, and that you will continue to enjoy, as best as one can under the circumstances, the remainder of this holiday season, not forgetting to remain safe. What do you think of our analysis this week, for next week? And do share your thoughts. Meanwhile, thank you so much for listening, and if you haven't already done so, please do subscribe to our channel, because less than 40% of viewers are actual subscribers, which is a great testament to those who are not subscribing actually viewing our videos, but it would help if you subscribe and press the bell sign, because you will then be notified of our videos as and when they're published. And we also produced a video on the Richard and Greg channel outlining the details of the Brexit package agreed between the United Kingdom and the European Union. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.